Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Simon Property Group, a leading real estate investment trust REIT and the largest shopping mall operator in the United States. Simon Property Group is known for owning and operating premier shopping, dining, and entertainment destinations across the country. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Simon Property Group has been a dominant player in the retail real estate sector for many years. From a behavioral finance perspective, how do biases like the anchoring effect and loss aversion influence their decision-making, especially in areas like leasing strategy and tenant relations?
The anchoring effect is particularly relevant to Simon Property Group's approach, especially in how they manage leasing and tenant negotiations. The anchoring effect refers to the cognitive bias where individuals rely too heavily on the first piece of information that anchor when making decisions. Simon Property Group leverages this bias by setting initial rent expectations during lease negotiations. By establishing a strong anchor, Simon can influence tenant perceptions of what constitutes a fair lease rate, often leading to more favorable terms for the company. Loss aversion, another key behavioral finance concept, also plays a significant role in how Simon Property Group approaches its property management and tenant retention strategies. Loss aversion refers to the tendency for people to prefer avoiding losses over acquiring equivalent gains. In the context of Simon Property Group, this bias is reflected in their efforts to minimize tenant turnover and maintain high occupancy rates across their properties. By prioritizing long-term tenant relationships and offering incentives to retain key tenants, Simon Property Group mitigates the potential revenue losses associated with vacancy and the costs of attracting new tenants.
And this focus on leveraging the anchoring effect and loss aversion has helped Simon Property Group maintain its leadership position in the retail real estate sector, appealing to both investors who value stability and tenants who seek prime locations.
Exactly. Simon Property Group's strategic use of the anchoring effect in leasing negotiations and loss aversion in tenant retention appeals to investors looking for a company that balances strong revenue generation with risk management. However, this approach also means that Simon Property Group must carefully manage the risks associated with changing retail trends, economic downturns, and evolving consumer preferences, particularly as the retail real estate industry continues to evolve with new challenges and opportunities.
Let's talk about diversity, equity, and inclusion at Simon Property Group. As a major player in the real estate industry, DEI is particularly important for Simon. How does this intersect with behavioral finance?
Simon Property Group's approach to DEI is crucial, especially as the company operates in a global and highly visible industry where inclusivity can drive better decision-making, innovation, and employee engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Simon's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Simon to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the real estate industry. For investors, Simon's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Simon build stronger relationships with employees, tenants, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like real estate, where the ability to foster inclusivity and innovation is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, Simon Property Group not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Simon Property Group operates in a highly competitive and consumer-driven industry. How does the company adapt to changing market conditions and consumer preferences, and what role does behavioral finance play in this?
Simon Property Group's strategy involves continuously adapting its property offerings, tenant mix, and customer engagement efforts to meet the evolving needs of shoppers and tenants while maintaining its focus on creating premium retail experiences. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, changing consumer preferences, and the shift towards e-commerce. Simon's ability to understand and respond to new market trends such as the increasing demand for mixed-use developments, the shift towards experiential retail, and the growing importance of digital integration in physical spaces allows it to stay relevant and competitive. By using data analytics, tenant feedback, and market research, Simon can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the retail real estate industry.
And this adaptability is essential for Simon Property Group, especially as they face competition from other retail real estate operators and the growing demand for more innovative and digitally integrated shopping experiences. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Simon Property Group's focus on understanding market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the retail real estate sector while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in tenant needs, consumer behavior, and competitive pressures.
Now, let's compare Simon Property Group to other companies in the retail real estate and rate sectors like Macerich, Taubman Centers, and Brookfield Properties. How do the behavioral finance dynamics differ?
Simon Property Group's dynamics are often compared to other retail REITs like Macerich, Taubman Centers, and Brookfield Properties, particularly in their approach to tenant relations, property management, and competition. Simon's strength lies in its focus on high-quality shopping destinations and strong tenant relationships, appealing to investors looking for a company that balances operational efficiency with market leadership. Macerich, with its emphasis on urban retail properties, appeals to investors interested in a company that prioritizes location and experiential retail. Taubman Centers, known for its leadership in luxury and high-end retail properties, attracts those looking for a company that is driving advancements in premium retail experiences. Brookfield Properties, with its focus on mixed-use developments and commercial real estate, appeals to investors interested in companies that integrate retail with broader real estate strategies. Simon's behavioral finance dynamics are shaped by its reputation for quality, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the retail real estate sector.
And unlike Taubman Centers, which focuses heavily on luxury retail, Simon Property Group's strength lies in its specialization in diverse retail destinations and strong tenant relationships, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Simon Property Group, the focus on premium retail, tenant satisfaction, and market adaptability provides a unique value proposition in the retail real estate industry.
To sum up, Simon Property Group's approach to business is deeply influenced by behavioral finance principles, whether it's through their leasing strategies, adaptation to changing market conditions, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Simon Property Group's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.